All right, let's get right into it. Today, we're going to completely flip the script on one of the most common and honestly one of the most misused indicators in all of trading, the RSI. Forget the textbook definitions. We're going to build a rock-solid framework for catching reversals, writing trends, and finding those sniper-like precision entries. You know this feeling. We've all been there. You've put in the work, you're watching the charts, and your so-called trusty indicator, the RSI, starts flashing. It looks like the perfect signal, practically screaming at you what to do next. So you do exactly what every trading book tells you to. The RSI creeps above 70. It's screaming overbought. You feel like you've cracked the code. You hit that sell button, you sit back, and then you just watch in absolute horror as the price doesn't reverse. It just keeps climbing higher and higher. It feels like a betrayal, doesn't it? Like the market itself is out to get you. But what if the RSI wasn't lying to you? What if you were just misunderstanding its language? And that brings us to the single most important idea we're going to cover. This requires a huge shift in your mindset. From this moment on, the RSI is not a simple buy or sell signal. I want you to start thinking of it as a literal lie detector. Because, let's face it, the price on your chart, it lies all the time. This slide really shows you two different worlds. Over on the left, that's the trap. That's where, frankly, 95% of traders live. They see the RSI hit an extreme level and they just panic. They sell into overbought or buy into oversold, thinking it's some kind of hard ceiling. But on the right, that's the truth. The pros sees the price making new highs, shouting about how strong it is. But they glance down at the RSI and see it's actually whispering, making lower highs. That disagreement, that imbalance, that is divergence. And that's everything. So here's the bottom line. You have to stop treating the RSI like it's a stop sign. A powerful trend can stay overbought for days, sometimes weeks. Instead, think of it like a speedometer in a car. Just because the car is going 100 miles an hour doesn't mean it's about to crash. It just means it has a lot of momentum. We don't care about the speed itself. We care about what happens when the speedometer says we're slowing down, but the car seems to be accelerating. That's the lie we're looking for. In this right here, this is basically our Rosetta Stone. It's the two languages we need to speak. Up top, you've got regular divergence. This is what signals a potential trend reversal. It's the trend killer. And on the bottom, you have hidden divergence. This signals a trend continuation. It's the trend fuel. Seriously, burn this slide into your brain. It's the foundation for all the strategies that are about to follow. Okay, let's put this stuff into practice. We'll start with our first strategy. We're going to use regular divergence to spot when a strong trend is finally running out of gas. This is all about catching that big reversal, and this is a big but, doing it safely. Just think of this as the market whispering to you that it's getting tired. You can see it so clearly here. The price pushes up, makes a brand new high, looks super strong, right? But then you looked out at the RSI, and what's it doing? It's making a lower high. The price is screaming, we're going to the moon, but the momentum, the real engine, is whispering, I don't think I have the energy. Now, here's a little pro tip for you. Sometimes these swings are subtle. If you're having trouble seeing them, just flip your chart over to a line chart. It gets rid of all the noise from the wicks and makes these momentum shifts pop right out. So, you've spotted it. The lie detector is beeping. Do you slam the sell button right away? No, absolutely not. This is the exact spot where so many traders still get it wrong. Spotting the divergence is just a warning. It's a clue. It is not, and I repeat, not your trigger to enter a trade. You need confirmation. And here's where we get that confirmation. It's a three-step dance. First, you spot the divergence. Second, you draw a simple trend line connecting the recent lows, basically putting the price in a little box. You're waiting for the price to prove you're right. And third, you wait. You wait for the price to actually break and close below that line. That snap, that's your signal. Sure, you might miss the very, very top of the move, but think of that as an insurance premium you're paying for being right. Awesome. That's how we catch reversals. But let's be real. Fighting a trend is stressful. The big money, the easier money is almost always made by joining a trend that's already moving. So for the second strategy, we're going to use hidden divergence to do just that. Now, this is where things get really cool, because hidden divergence can feel totally backward at first. So check this out. In a healthy uptrend, the price pulls back, but it makes a higher low. The bullish structure is still perfectly fine. But during that exact same little dip, the RSI makes a lower low. At first glance, that looks scary, right? Like momentum is just falling off a cliff. But stop and think about it. If the sellers are pushing momentum down that hard, but they can barely even move the price, what does that actually tell you? It tells you that the sellers are getting exhausted. The pullback is weak, not the trend. It's like a slingshot being pulled back.
Okay, but how do we stop ourselves from buying a dip that just keeps on dipping? We need a filter, a rule. And for that, we bring out the big gun, the 200 EMA. This is the line in the sand for big institutions. And the rule is simple. It's non-negotiable. If the price is above the 200 EMA, you are only allowed to look for bullish hidden divergence to buy, period. If it's below, you're only looking for bearish setups to sell. This one rule will stop you from fighting the big money tide. And this brings it all together into a complete system. I call it the Trinity Confirmation Stack. It's a three-part checklist. First, the trend filter. Is the price above the 200 EMA? Check. Second, the signal. Have you spotted that hidden divergence, that slingshot being pulled back? Check. And third, the trigger. For this, we add one more tool, the stochastic oscillator. We just wait for its lines to cross back over in the direction of the main trend. That cross, that's the starting pistol. It's the final confirmation that the pullback is over and the trend is ready to resume.
All right, so we've got a plan for reversals and a plan for continuations, but what about when the market isn't really trending hard one way or the other? What about when it's just locked in a huge battle at a major historical price level? Well, that's where our third strategy comes in, the multi-timeframe sniper approach.
This whole process starts way up high, on the daily chart. First, you identify a major, obvious level of support or resistance, a place where the market has turned around before. Then you just wait for price to come back to that level and show you some kind of reaction, like these big, long wicks. But here's the critical part. A reaction is not a trade. A long wick just means a fight happened at that level. It doesn't tell you who actually won the fight.
So how do we figure out who's winning that fight? Simple. We zoom in. We take that battle zone we found on the daily chart and we drop down to a lower time frame, like the 1 hour or the 4 hour. And what you'll see is that what looked like just a single messy wick on the daily chart is actually a whole complete trend structure down on the lower time frame. We're essentially putting that wick under a microscope to see what really happened inside.
And it's inside that lower time frame trend that we look for our entry. This is where all the pieces come together in perfect alignment. You have the high time frame level acting as your location, your battleground. You have regular RSI divergence on the lower time frame telling you momentum is dying right as it hits that wall. And for the final trigger, you use the same trick from strategy 1. You draw a trend line on that smaller structure and you wait for a clean, decisive break. When all three of those things line up, that's an incredibly high probability trade. You see, all of these strategies, reversals, continuations, sniper entries, they're really all built on one single core philosophy. And it's the one thing that truly separates professional traders from gamblers. It's about shifting your mindset away from predicting and towards simply reacting. And this is so, so important. We all want to be that genius, right? The one who perfectly calls the absolute top or the absolute bottom. It's a huge ego boost. But profitable trading has absolutely nothing to do with ego. It's about playing the probabilities. Think about it. Every single strategy we've talked about, waiting for the trendline break, waiting for the stochastic cross, it means you will always be a little bit late to the party. You'll never be the first one in. But you know what? Being a little bit late means you're safe. You're trading a tiny slice of profit for a massive amount of confirmation. So let's put it all on one page. Here it is, your complete toolkit, the master cheat sheet. You've got strategy 1, the reversal play, for when a trend is exhausted using regular divergence and a trendline break. You've got strategy 2, the continuation play, for joining pullbacks using the 200 EMA, hidden divergence, and a stochastic cross. And you've got strategy 3, the sniper play, for those key levels where you zoom in from the daily to the hourly and wait for that perfect confluence. You now have a high probability plan for pretty much any market condition. So I'll just leave you with this one final thought to chew on. We've spent this whole time learning how the price chart can lie to us and how an indicator like the RSI can reveal the truth about what's happening under the surface. And it kind of makes you wonder, if the RSI can be a lie detector for price and momentum, what other tools are sitting there on your screen right now that might be telling you the exact opposite of what they seem? What other lie detectors are just waiting for you to flip the switch?